And the April jobs report had higher than expected growth, adding 115,000 jobs. Unemployment rates held steady at 4.3%. We're just giving you a little sneak peek of that. And here to tell us what this all means is President and CEO of Wilsey Asset Management, Brent Wilsey himself. Brent, always so great having you here.
Thanks for having me.
Of course. All right, let's make some money. Give us some good news. What does this latest report reveal?
Well, the latest report's good news, but it's also bad news. It's good news because people are working, wage increased 3.6%, so making more money, and the expectation was only 55,000. You said it was 115, so it's much better than expected. So that's all positive. But the Federal Reserve has a dual mandate. One is to keep employment strong, which it is, and then two, to make sure inflation doesn't get out of control. Now, inflation, that's getting a little bit high. We'll talk more about that. But the jobs report, because people are working, 4.3% unemployment, there's no need for them to reduce interest rates because the jobs number are good. So it is a problem because if you're looking at refinancing, getting an equity line to do that remodel, buying a new car, rates are still staying high, and it's difficult for people because we want them to come lower. A few months ago, yeah, they're going lower, but they're not.
And adding to what you're saying, what contributes to job growth?
Well, I mean, what's contributing to jobs growth is you'll see like, oh, layoffs, but there's enough jobs out there that they replace them. And it's kind of funny because what's doing really well is hospitality. Hospitality had about an increase of 37,000 jobs, or I'm sorry, healthcare did. Transportation and warehousing was up like 30,000 jobs. That was positive. Information was negative. We saw that the software companies having some problems on about 18,000. But what I really like seeing is in past administrations, we had it to where job growth was coming from the federal government. That's not happening. Over the last year or so, it's down about 12%, another 9,000 decline in federal jobs. So that's less taxes we have to pay for less people working in the federal government. Run like a company, less people.
Yeah, and how is the retail market looking?
Retail market's looking pretty good. We've got strength there. People are still spending. Now there is this K economy to where your higher-end consumers are spending more than the lower-end consumer, having a little bit of difficulty with the higher gas prices. And I did a report that I don't think we'll see those come down probably till July. I mean, right now we're putting the squeeze on Iran. Like, you're getting no money. They're losing like $200 million a day, $6 billion a month. So this is all positive stuff, but it takes time for this to happen. And when the jobs, not the jobs, when the inflation report comes out tomorrow, CPI, and then the PCE comes out 2 weeks later, they're probably not going to be that good. So again, no reason, no way that the Fed can reduce interest rates with a good jobs market, and also inflation still kind of high.
Yeah, many are talking about AI too. How is AI impacting the job market?
Well, you know what's really hurting the most is it hurts the entry-level people. I mean, people get out of college, I heard about a third of them cannot find a job in their profession because they're not needed. I mean, you don't need those basic people. And so AI is not hurting the job market overall. It's actually helping with productivity. But it is hurting the entry-level people because, no, we have AI that will do that now.
It's so interesting to say that because today is our first day where we launched our automated teleprompter. So no longer we have someone operating the teleprompter. We're no longer using the remotes. It's just all voice activated. So yeah, it is interesting how so much technology is taking over jobs as well. And adding to what you're saying about a lot of the younger generation having a hard time looking for work, I just read this report from USA Today about the Gen Z, which is ages 14 to 29. They're having a hard time keeping a job. They have a big turnover rate, so they get hired and they get fired. Why do you think that is?
They're just not trained very well. They come from a different point. I saw CEO of JP Morgan Chase, Jamie Dimon. He said, talk to people. Well, that generation doesn't like to talk to people. They're used to texting, emailing, and that's not how you do business. And that's probably what's happening is that they want to be in their little cubicle. Don't bother me. Don't talk to me. I don't want to talk to my friends. And in business, you've got to talk to people. You've got to get out there and interact with the business world. And they're probably lacking on that. And the generation grew up with everybody gets a trophy. So they think, I don't have to work hard. I'm going to win no matter what. So it's a different generation. They have to be trained. And I think the economy will probably go a little bit slower, and that's why it's like if you're not working hard, we need to let you go.
Yeah, that's a really good point. Brent Wilsey, we appreciate you being here talking about the latest job report, and it is good news. Of course, every report has its pros and its cons, but if you want to make money and keep your money, Brent Wilsey is the guy.
Thank you very much.
We'll be right back.